Come on, Washington. Hey, kings and queens. It's Sandra Fenwick, your mortgage consultant here. Happy Thursday. Give me 1 second. I'm working on these platforms. I'm in the house doing laundry, so you guys might hear my washing machine in the back. I wanted to come on because I need to do my lunch and learn today, and I forgot all about it. Y'all, so many things been going on in life in general. I forgot about it this week. So I wanted to pop on because there's a lot going on in our world in general, in our country, I should say. The big, beautiful bill just passed, and I don't want to get into no arguments with no Trump supporters or whatever. But this is a time of uncertainty in our country, and I wanted to come on to discuss how that may affect interest rates and may affect home buying. We already have experienced thousands of people, almost 60, 70, 80,000 people. It might be in the 100,000s by now of people who have been laid off of their jobs in the federal government, and of programs who depend on federal funding have been cut. So people who are working in federally funded companies have been laid off. So the economy is, it's a little rocky right now. How is this affecting interest rates? For the last, I'll say 2 weeks, I get alerts daily that says the interest rates have gone up, the interest rates have gone down. And for the last 2 weeks, I've been getting emails saying the interest rates have gone down. The trend I'm noticing right now is over the last 2 to 3 years, our economy has not been in the best shape. We've dealt with inflation, and some people were saying we were headed towards a depression, but people have survived. Things are costing more, but incomes are not getting higher. But what I do notice is that people are using their real estate to survive. Right now is the time where people are refinancing and pulling money out of their houses. People who've relied on using credit cards and things of that nature to pay their bills over the last couple of years and now have maxed those out. They have now did a refinance and consolidated their cards into their home. So this tells you no matter what the economy is doing, your house is an asset. People have not started losing values in their homes. Home values have not gone down. Home prices still continue to rise. So if you bought your house 5 years ago, you have equity in your house. If you bought your house 2 years ago, you have equity in your house. And people are tapping into the equity by doing a HELOC or doing a cash out refinance. People are using their home to pay off their cars, other personal loans and things of that nature to be back in a better financial situation, which tells you at this time, it is beneficial to purchase real estate, because when we go through times like these, this is the first time we've gone through economic crisis in this country, and it probably won't be the last. But what stays true is people who own their homes are usually okay, because that's an asset that they invested in, and now they're using that asset to survive. So if you are in a position to purchase a home right now, I think you should. I think right now people are selling their homes. There is lots of inventory on the market. The interest rates are not crazy. There have been times when interest rates were 10, 11, 12%. Right now they're in mid 5, 6s. So as long as you can afford to purchase that home. So when we pre-approve you, we go by your debts versus your income. So we have to make sure that we don't put you on a house that you can't afford. So we go in and we pre-approve you and we let you know what you can afford to buy. We do have several down payment assistance programs. We have some for FHA, and now another program has come out called the 1% down program. That is a conventional loan. Minimum score is 640, and you put down 1%, and the bank puts down 2%. The bank puts down 2% up to $7,000. So that is great. So if you're buying a $300,000 house, your down payment will only be 1%, which is $3,000. Then you also have to pay your closing costs if you don't get assistance from the seller. But the good thing is, in this market that we're in right now, the seller will be willing to help you in most cases. Not in all, but in most cases. So if you want to talk to me about getting pre-approved and getting ready to buy, I'm here to offer assistance for that. If you have more questions about the 1% down program, I'm here if you have questions about that. We were talking about what I wanted to do the lunch and learn about this week was about appraisals and how that worked. The last one I did, week before last, I talked about the 6 steps to home purchase. First, you be mentally ready. Second, you get pre-approved. Third, you go out shopping. Fourth, you put in the offer. Fifth, your offer is accepted. Sixth, closing. Right? So after you find your house, the house needs to be appraised. And I'll do a whole presentation about appraisals and appraisals only. I have a video that went viral on TikTok on how to get your home ready for appraisal. So for the sellers, I can link it in the caption, and you can see that video. It's very insightful. I gave you 10 tips to get ready for appraisals. But as a buyer, the bank is only going to lend you a percentage of what the house appraises for. So the appraisal is a very, very important step. The appraisers are not looking at the condition of the home like a home inspector. There are 2 different things. Home inspector is for you. The appraisal is for the bank. The bank wants the home appraised to see what the house is valued at. So that's what the appraisal is. Whenever you're buying a house, you have to get an appraisal. Usually when you're getting cash out doing a refinance, you have to get an appraisal. Now, in that case, if you're doing a refinance and you own the house, you have to take the necessary steps to get your home ready for appraisal. So you have to make sure it's clean, decluttered, and if you want to do some upgrades to the house, you can do small, cheaper upgrades to add value to your house. So the appraisal is an important step because it tells you the value of it. And that's how you will know how much your house is worth. I came on here for a good time, not a long time today, y'all. So I just wanted to check in because I don't know if people were looking for the lunch and learn this week, but I apologize. I will be back next week in full effect. I am tired. It's a lot going on. And I just wanted to come on, drop a few words, let y'all know that I haven't forgotten about y'all. I am your mortgage expert. So if you have any questions, buying a house, refinancing, if you are, I think right now, and I'm going to talk candidly, I'm going to speak candidly about where we are right now. I think right now we need to be working towards building income, generating income, building wealth. I think this current administration is very, very wealth builder friendly. So there are still opportunities for you to go out and create businesses. If you want to purchase commercial real estate or investment real estate, y'all know I can help y'all with that. When you're dealing with commercial and investment properties, we can do that all over the country. We are not just stuck here in the DMV area. The investments properties are more about the property base. Whereas when you're buying your residential home, we're doing your pre-approval based upon how much you can afford, what your financial situation is, because you're going to actually live in that home. However, when you're looking into investment properties, it's more property based. So we have to find a property run the numbers on that property, make sure that that property is going to be income producing, and then we get that loan. So if the numbers make sense, you can get the loan. If you're looking to start fixing and flipping properties, right now is a time where we need affordable properties, affordable units. Here in DC, if I have any investors that see this, that have rental properties in DC, and you don't mind having voucher tenants in your property, I have plenty of voucher clients that needs properties, 2, 3, 4, and 5 bedrooms in DC. If you're looking to get into buying properties in DC, and again, my program only works in DC, so we're speaking specifically about DC. However, if you buy a property in Maryland or Virginia or wherever, there are a lot of voucher holders that need those properties. And there are a lot of people, period, that needs rentals properties. But what I'm speaking of is in DC right now, I need rental properties. So if you own some homes in DC and you need a tenant and you don't mind having voucher clients in your property, please give me a call immediately. If you're looking to start investing and you want to take your money that's been parked somewhere and start making that money work for you, please call me. I can help you buy commercial properties and investment properties. So that goes back to my point. I'm sorry, I'm all over the place. But my point was, I think right now is the time that we need to invest in ourselves. Right now is the time that we need to be starting to build wealth if we haven't started already. Right now we need investment portfolios. A lot of these tax breaks and tax cuts are going to people who own businesses and who own investment properties, X, Y, and Z. We need to be able to have income and build our portfolio. Whereas if we are to get laid off, we have something to fall back on. Mortgage experts have a whole financial division. We offer insurance. We offer financial planning. We offer insurance for the kids. If you're looking to do that, please give me a call and I can connect you with the right people. Right now is the time to be smart, start building, buying assets, so we can make sure that no matter what goes on, we're okay. We always have some money coming in. So that's it. You guys have my number. My cell phone is 301-965-1155. Feel free to inbox me on any of these platforms. And also you can leave a comment below and I will reply. Thank you guys. Have a great day. Love y'all. Have a good holiday weekend. Bye.